Based on the historical data and forecast, Bitcoin has shown volatility with periods of consolidation and minor upward trends. The RSI consistently fluctuates around the mid-range, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been widening, suggesting increased volatility, and the price has been testing the lower band recently. Considering the support price of $101,300 and the forecast for the next week, I recommend a moderately bullish strategy. We will enter a long position when the RSI falls below 30, indicating an oversold condition, and the price bounces off the support level of $101,300. Specifically, let's enter a long position at $101,300. The stop loss will be set slightly below the support at $99,700 to protect against a potential breakdown. The initial target price will be the nearest resistance level, $104,400. If the price reaches this target, we will reevaluate the situation. If the price continues to show upward momentum, we can set a second target at $106,500. This strategy combines the RSI oversold signal with the support level confirmation and utilizes the Bollinger Bands to gauge volatility. This approach balances risk and potential reward, aiming for high returns while managing downside exposure. Based on the historical data and forecast, Ethereum has shown significant volatility and a downward trend. The RSI consistently dipped below 50, indicating a prevailing bearish sentiment, with a low of 29.2 on November 2, 2025, suggesting an oversold condition. The Bollinger Bands have been widening, confirming increased market uncertainty. Considering the forecast for the next week, the price is projected to remain within a range of $3,310 to $3,510, with a general downward bias. Therefore, I recommend a short selling strategy targeting a gradual decline. The entry price for this short position will be $3,510. The stop loss will be set at $3,560, just above the recent high and the top of the Bollinger Band to mitigate potential upside surprises. The initial target price is $3,380, aligning with the forecast low for November 11, 2025. If the price breaks through $3,380, the target price will be revised to $3,280, the established support level. This strategy combines RSI and Bollinger Band signals with the forecast data to manage risk and maximize potential returns, aiming for a high probability, moderate risk trade. Based on the historical data and forecast, XRP shows a downtrend with increased volatility. The RSI consistently fluctuates below 50, indicating a bearish momentum. The forecast for the next week predicts a continuation of this downward trend, with prices ranging between $2.24 and $2.29. Considering the support price of $2.31, a short position is advisable. I recommend entering a short position at $2.3, with a stop loss placed slightly above the resistance level at $2.55. The initial target price should be $2.2, aiming to capture a quick profit from the anticipated decline. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential shorting opportunity. If the price retraces towards the middle band, it's a chance to secure profits. I propose a portfolio combining the RSI and Bollinger Band strategies. If the RSI falls below 35, enter a short position at $2.25, set a stop loss at $2.3, and target $2.15. If the price touches the upper Bollinger Band, enter a short position at $2.7, set a stop loss at $2.65, and target $2.5. This diversified approach mitigates risk and maximizes potential returns by capitalizing on different market signals. Based on the historical data and forecast, BNB has shown a downtrend from October 27, 2025, to November 9, 2025, with a recent bounce. The RSI indicates oversold conditions, reaching a low of 32.6 on November 7, 2025. The forecast for the next week projects a gradual increase, but remains within a tight range around $973 to $999. Considering the support level at $991 and the Bollinger Bands, I recommend a long position entry at $973. A stop loss should be placed just below the support level at $963 to limit potential losses. The initial target price is set at $986, aiming to capitalize on the short-term upward momentum suggested by the forecast and RSI recovery. To refine this strategy, we'll incorporate a trailing stop loss based on the Bollinger Bands. If the price rises above the center band, the stop loss will be adjusted to the lower band. For example, if the price reaches $986, the stop loss moves to $979. If the price continues to rise, the stop loss will follow the lower Bollinger Band. A secondary target price can be set at $999, coinciding with the upper end of the forecast range. This combined approach of an initial long entry, a tight stop loss, and a dynamic trailing stop loss allows for maximizing profits while minimizing risk in this volatile market. Based on the historical data and forecast, Solana shows a downtrend. The RSI consistently fluctuates below 50, indicating weakening momentum. The forecast for the next week projects further decline, with prices ranging from $161 to $153. Considering the support level at $155, a short position strategy is recommended. We will enter a short position at $161, placing a stop-loss order at $166 to limit potential losses. The initial target price is set at $155, aligning with the established support level. To refine this strategy, we will incorporate Bollinger Bands. If the price breaks below the lower band, it strengthens the short position. If the price approaches the upper band, we will consider tightening the stop-loss order. The final portfolio will be a short position at $161 with a stop-loss at $166 and a target price of $155. This approach balances the downward trend with risk management techniques, aiming for high returns while safeguarding against significant losses. Based on the historical data and forecast, TRON shows a slight downward trend. The RSI consistently hovers below 50, indicating a generally weak momentum. The forecast prices for the next week are also slightly downward trending, further reinforcing this bearish outlook. Considering the support price is consistently at $0.284 and the recent dips below the lower Bollinger Band, I recommend a contrarian strategy aiming to capitalize on potential short-term bounces. We will initiate a long position at $0.285, placing a stop-loss order at $0.278 just below the recent low of the lower Bollinger Band to limit potential losses. The target price will be set at $0.293, near the resistance level, aiming for a quick profit from a potential rebound. To refine this strategy, we'll incorporate the RSI indicator. When the RSI falls below 30, indicating an oversold condition, it signals a potential buying opportunity. Given the current RSI around 40, we'll wait for a pullback to around $0.285 and an RSI below 30 before entering the trade. If this condition is met, we will enter a long position at $0.285, with a stop-loss at $0.278 and a target price of $0.293. This combined approach leverages both Bollinger Bands and RSI to identify high-probability entry points, maximizing potential returns while minimizing risk. Based on the historical data and forecast, Dogecoin has been in a downtrend, with the price fluctuating between a support of $0.162 and a resistance of $0.185. The RSI has consistently remained below 50, indicating a bearish momentum, and has even dipped below 30, signaling an oversold condition. The Bollinger Bands show that the price has been trading near the lower band, further confirming the downward trend. Looking at the forecast for the next week, the price is expected to remain around $0.17, potentially testing the support level. Therefore, I recommend a contrarian strategy, anticipating a short-term bounce after the oversold condition. The strategy involves entering a long position at $0.172, placing a stop-loss order at $0.162 to protect against further downside risk, and setting a target price at $0.178 to capitalize on a potential rebound. This strategy leverages the RSI's oversold signal and the Bollinger Band's lower band proximity. The entry price aligns with the initial forecast and a potential support bounce. If the price fails to rebound and breaks below the $0.162 support, the stop loss will be triggered, limiting the potential loss. Conversely, if the price reaches the $0.178 target, the position will be closed, securing a profit. This approach aims to capture a short-term upward movement while managing risk effectively. Based on the historical data and forecast, Cardano has shown a downtrend from October 27, 2025, to November 9, 2025, with a recent bounce. The RSI consistently remained below 50, indicating a weakening momentum. The forecast for the next week suggests a continuation of this sideways to slightly downward trend, hovering around $0.54 to $0.56. The support price is consistently at $0.551, acting as a potential floor. Considering these factors, I propose a contrarian strategy focusing on short-term pullbacks towards the support level. We will initiate a long position at $0.551, placing a stop-loss order at $0.532 to limit potential losses if the price breaks below the support. The initial target price will be $0.578, aiming to capture a quick profit from a potential bounce. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, around $0.513 on November 9, 2025, it suggests a potential oversold condition, increasing the likelihood of a short-term rebound. However, given the overall downtrend, we will prioritize the RSI and support level. If the price reaches $0.578, we'll consider moving the stop-loss to break even to protect profits. If the price continues to show weakness and fails to reach $0.578 within a few days, we'll exit the position to minimize losses. This combined approach, leveraging both RSI and Bollinger Bands, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility, with a recent downtrend followed by a slight recovery. The RSI indicates oversold conditions, particularly on November 9, 2025, with a reading of 36.8. The Bollinger Bands also suggest a potential reversal, as the price has approached the lower band. Therefore, I recommend a long position with an entry price of $3,820. Place a stop-loss order at $3,550, aligning with the established support level. For the target price, I suggest $4,150, aiming to capture a potential rebound towards the middle of the Bollinger Bands. This strategy combines RSI and Bollinger Band signals to capitalize on a potential bounce from oversold levels and support. To refine the portfolio, I suggest a layered approach. Initially, allocate 60% of the capital to the long position as described above, with an entry price of $3,820, a stop-loss at $3,550, and a target of $4,150. Subsequently, if the price reaches $4,150, consider taking 50% of the initial position and setting a trailing stop-loss at $4,000. For the remaining 40% of the capital, wait for a pullback to around $3,700 and enter a smaller long position with a stop-loss at $3,580 and a target of $3,870. This diversified approach aims to maximize potential returns while mitigating risk by adjusting positions based on price movements and utilizing both initial and follow-up entry points. Based on the historical data and forecast, Chainlink shows a downtrend with considerable volatility. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast for the next week suggests continued downward pressure, with prices hovering around $15. Considering the support price of $14.7 and the RSI approaching oversold levels, around 32.8 on November 9, I recommend a contrarian strategy targeting a potential rebound. Specifically, I suggest entering a long position at $15.2, placing a stop-loss order at $14.7 to mitigate potential losses if the downtrend continues, and setting a target price of $16.6, near the resistance level. To further refine this strategy, we will integrate the Bollinger Bands. When the price touches the lower band, it indicates a potential oversold condition. Given the forecast and the current price of $15.4 on November 10, we can enter a long position at $15. The stop-loss should be set at $14.7, just below the support level, and the target price should be $15.8, aligning with the upper Bollinger Band and a reasonable profit target. This combined RSI and Bollinger Band strategy offers a balanced approach, capitalizing on potential rebounds while minimizing risk with well-defined stop-loss orders. Based on the historical data and forecast, Aptos exhibits a volatile trend with periods of consolidation and potential upward momentum. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip to 27.6 on November 2, 2025, signals a potential oversold opportunity. Considering the forecast for the next week, which predicts a gradual increase in price, I recommend a long position with an entry price of $2.94. The stop loss should be set slightly below the support level at $2.85 to mitigate potential losses. A conservative target price of $3.28, aligning with the forecast and recent resistance levels, provides a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. The price frequently tests the lower band, suggesting potential buying opportunities when the price approaches $2.62. However, given the recent oversold signal and the forecast, a more immediate entry at $2.94 is preferred. The target price of $3.28 is based on the forecast and recent resistance, while the stop loss at $2.85 offers a safety net. This blended strategy combines RSI's oversold identification with Bollinger Band's volatility assessment, aiming for a high-return portfolio with controlled risk. Based on the historical data and forecast, Stacks demonstrates a volatile trend with periods of both decline and recovery. The RSI consistently fluctuates, indicating indecision in the market. The price has been bouncing between the support level of $0.353 and the resistance level of $0.422. Considering the recent price action and the forecast for the next week, the price is predicted to move downwards. I recommend a short position strategy. Enter a short position at $0.419 with a stop loss at $0.422 and a target price of $0.382. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the middle band, suggesting a potential for a move towards the lower band. The RSI is currently at 47.1, nearing the overbought level of 80, which further supports a short position. The combined strategy is to enter a short position at $0.417, set a stop loss at $0.422, and target a price of $0.382. This combined strategy leverages both the RSI and Bollinger Bands for a more robust and potentially higher return investment approach. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility, with a recent downtrend followed by a slight recovery. The RSI indicates oversold conditions, particularly on November 9, 2025, with a reading of 36.8. The Bollinger Bands also suggest a potential reversal, as the price has approached the lower band. Therefore, I recommend a long position with an entry price of $3,820. Place a stop-loss order at $3,550, aligning with the established support level. For the target price, I suggest $4,150, aiming to capture a potential rebound towards the middle of the Bollinger Bands. This strategy combines RSI and Bollinger Band signals to capitalize on a potential bounce from oversold levels and support. To refine the portfolio, I suggest a layered approach. Initially, allocate 60% of the capital to the long position as described above, with an entry price of $3,820, a stop loss at $3,550, and a target of $4,150. Subsequently, if the price reaches $4,150, consider taking 50% of the initial position and setting a trailing stop loss at $4,000. For the remaining 40% of the capital, wait for a pullback to around $3,700 and enter a smaller long position with a stop loss at $3,580 and a target of $3,870. This diversified approach aims to maximize potential returns while mitigating risk by adjusting positions based on price movements and utilizing both initial and follow-up entry points. Based on the historical data and forecast, Ethereum has shown significant volatility and a downward trend. The RSI consistently dipped below 50, indicating a prevailing bearish sentiment, with a low of 29.2 on November 2, 2025, suggesting an oversold condition. The Bollinger Bands have been widening, confirming increased market uncertainty. Considering the forecast for the next week, the price is projected to remain within a range of $3,310 to $3,510, with a general downward bias. Therefore, I recommend a short selling strategy targeting a gradual decline. The entry price for this short position will be $3,510. The stop loss will be set at $3,560, just above the recent high and the top of the Bollinger Band to mitigate potential upside surprises. The initial target price is $3,380, aligning with the forecast low for November 11, 2025. If the price breaks through $3,380, the target price will be revised to $3,280, the established support level. This strategy combines RSI and Bollinger Band signals with the forecast data to manage risk and maximize potential returns, aiming for a high probability, moderate risk trade. Based on the historical data and forecast, SKY shows a downtrend with increasing volatility. The RSI consistently dips below 30, indicating an oversold condition, while the price fluctuates within the Bollinger Bands, suggesting potential for a rebound. The forecast for the next week predicts a sideways movement around $0.052 to $0.053. Considering these factors, I recommend a long position strategy when the RSI reaches an oversold level of 20. Specifically, enter a long position at $0.052. Set a stop loss at $0.05 to limit potential losses if the downtrend continues. The target price for this trade will be $0.0553, near the recent resistance level. This strategy combines the oversold RSI signal with the support and resistance levels to maximize potential gains while minimizing risk. The Bollinger Bands confirm the potential for a short-term bounce, further supporting a long position. The portfolio will prioritize this RSI-based strategy due to its clear entry, stop loss, and target points, offering a high probability opportunity in the current market conditions. This approach balances risk and reward, aligning with a high returns investment strategy. Based on the historical data and forecast, Virtual's protocol shows a mixed trend with periods of volatility. The RSI fluctuates between 48.7 and 71.1, indicating both oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased price volatility. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands for optimal returns. The forecast for the next week anticipates a generally upward trend, with prices ranging from $1.52 to $1.69. We will implement a strategy that capitalizes on short-term price movements within this upward trend, focusing on entries when the price dips towards the lower Bollinger Band and the RSI indicates an oversold condition. Our primary strategy involves a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. For example, on November 9, 2025, the RSI was 54.9 and the lower Bollinger Band was $0.73. We will wait for a dip to $0.73, enter a long position at $0.73, set a stop loss at $0.68, and target a profit at $1.45. If the price breaks above the upper Bollinger Band and the RSI exceeds 80, we will close the position and consider a short position. For the forecast week, on November 13, 2025, if the price touches the lower Bollinger Band at $1.43 and the RSI is below 20, enter a long position at $1.43, set a stop loss at $1.38, and target a profit at $1.64. This strategy balances risk and reward, aiming to capture short-term gains while protecting against potential losses. Based on the historical data and forecast, Pump.fun shows a downtrend with significant volatility. The price has been fluctuating between a support of $0.0037 and a resistance of $0.00502. The RSI indicates periods of oversold and overbought conditions, but currently hovers around the mid-range, suggesting indecision. The Bollinger Bands have been widening, reflecting increased volatility, and the forecast shows a continued downward trend with prices around $0.00392. Considering these factors, I propose a short selling strategy focusing on the resistance level with a conservative approach. My strategy involves short selling Pump.fun when the price touches the resistance level of $0.00502. The entry price will be $0.00502. Given the downward trend and increased volatility, a stop loss should be set slightly above the resistance at $0.00514 to protect against potential upward spikes. The target price will be set at the support level of $0.0037, aiming to capitalize on the anticipated downward movement. This strategy combines the resistance level as an entry point, the Bollinger Band's upper limit for stop loss, and the support level as the target, providing a balanced risk-reward profile. The potential profit is 0.00502 minus 0.0037 is equal to $0.00132. Based on the historical data and forecast, Uniswap shows a fluctuating trend with recent upward momentum. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential price volatility. Considering the support price of $6.02 and the resistance price of $7.64, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. First, initiate a long position at $5.83 with a stop loss at $5.75, capitalizing on the current forecast price and the recent upward trend. The initial target price is $6.52, aligning with the forecast for November 16, 2025. As the RSI approaches 80, consider taking partial profits at $6.19. If the price breaks below the support level of $6.02, immediately exit the position to minimize losses. If the price reaches the resistance level of $7.64, move the stop loss to the center of the Bollinger Bands to protect profits and allow for further upside potential. This combined strategy aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Starknet exhibits a clear upward trend. The price has been fluctuating within a range, but the recent surge to $0.147 on November 9, 2025, indicates strengthening bullish momentum. The forecast for the next week projects further price increases, reaching $0.158. Considering the RSI values, which have been trending above 40, and the Bollinger Bands consistently widening, suggesting increased volatility and potential for upward movement, I recommend a long position. The entry price should be $0.131, with a stop loss placed at $0.125 to protect against a potential pullback. A target price of $0.15 should be set to capitalize on the anticipated upward trend. To refine this strategy, we can incorporate RSI signals. When the RSI dips below 37.6, it signals an oversold condition, suggesting a potential buying opportunity. Conversely, when the RSI exceeds 60.3, it indicates an overbought condition, prompting consideration of taking profits or tightening stop-loss orders. Combining these signals with the Bollinger Bands, which indicate price volatility, allows for dynamic adjustments to the strategy. Therefore, I suggest a portfolio consisting of 60% of the long position strategy described above and 40% of a strategy that adjusts the entry and exit points based on RSI and Bollinger Band signals, aiming for a high return while managing risk effectively. Based on the historical data and forecast, DECRED has shown significant volatility with a recent upward trend. The RSI indicates periods of overbought and oversold conditions, while the Bollinger Bands suggest potential price fluctuations. Considering the support price of $29.4 and resistance of $43.4, and the forecast for the next week, I propose a combined strategy. Initially, we will enter a long position at $26.7, capitalizing on the forecast price and the recent upward momentum. The stop loss will be set at $25.5 to mitigate potential losses if the price declines, and the target price will be $30.8, aligning with the forecast and providing a reasonable profit margin. Furthermore, we will incorporate RSI signals. If the price drops to the oversold level below 20, we will enter a long position at the lowest price, with a stop loss at $2 below the entry price and a target price at the resistance level of $43.4. Conversely, if the RSI reaches the overbought level above 80, we will consider a short position at the highest price, with a stop loss at $2 above the entry price and a target price at the support level of $29.4. This blended approach, utilizing both forecast data and RSI signals, aims to maximize returns while managing risk effectively.